How to draw a perfect support or resistance on the chart. Is there any proper technique for trading on support or resistance where your trading becomes more precise and you do not have to close your trade to red? What exactly is the method, the secret of trading on support and resistance? You see, if you are trading into the stock market and you have at least a basic knowledge of technical analysis, you must have came around a concept which is called as support and resistance. Now I guess you must have known that whenever the stock takes a reversal from the support, you must buy that stock. And when the same scenario happens at the resistance, you must sell. But this is like an incomplete knowledge of using support and resistance tool in technical analysis. And right in this video, I am going to exactly teach you the concepts like how can you properly draw support and resistance on the chart, how can you use more confirmation while trading on them, and when is that time that you must avoid trading on those price levels. I am going to explain in detail in this video along with examples from the stock market. So if you don't want to miss a valuable piece of information that can help you a lot in your trading, make sure that you're watching this video till the end, do not skip it. And one more thing, if you are new to this channel or not yet subscribed to this channel, make sure that you do it so that you won't miss any upcoming videos or updates on the stock market and technical analysis. Alright, so let's start with the video and let me quickly take you to the charts. So as you can see on the screen, we are over here on the charts. And this is the weekly chart of State Bank of India, which is a banking stock in the Indian market. So first let us identify some good support or resistance level in this area. So you see, when you join two swing lows on the same price line and extend that line, you get a support which is drawn on the chart. So you can see this is where the price first took a support on this level. So this is the touch point 1, this is the touch point 2, and that is the touch point 3 as you can see on the screen. Now remember that the number of touch points on a support or resistance line plays a really important role in its strength. And we can say that more the number of touch points, more is the strength of the support or resistance line. And I would say if you want to catch a perfect trade on support, resistance or any other price line, it must have a touch point of more than 2. So you see this support line has more than 2 touch points. And at the third touch point, we can look for buying. But remember, whenever you're trading on support and resistance or any other price action technique, it is really important to confirm it. And for that purpose, you can use any indicator. I personally prefer using RSI for trading on this tactic. So you can observe when the price takes a support at this level. At the same time, the RSI is also taking a support at the 40 level. Now you must have known that RSI is a momentum indicator and 40 and 60 are an important level when it comes to trading on RSI. I have made 2 separate videos on how can you use the RSI indicator and trade on it in the market. If you want, you can watch them after this video. So what I was saying is that it is really important to confirm any price action that you see on the chart. And you can use RSI or maybe any other indicator to trade support and resistance in the market. You see, this is a zone where the price is taking resistance, and similar concept can be implemented for the resistance as well. Like the price is resisting over here, and similarly we can see the RSI is resisting at the 60 level. So a short swing trade could have been made here. Let me show you some another examples. You can observe a chart on the screen where the price is taking a support at this level. And there are at least 2 touch points at this support zone, which makes it really good for trading whenever the price takes a reversal on it. And same thing happens the next time. The price takes support at this zone, but at the same time the RSI is also taking support at the 40 level. And there is also a sharp rise into the volume when the support is formed. So all these factors, that is proper drawing the support, number of touch points, RSI, volume, will give you more confirmation on one trading signal. So you can simply buy the stock at the closing of this candle and your stop loss will be below the swing low, that is below the support. And even in case you go wrong in this trade, you will exit with a very small loss. But if you go correct, you just have to trail the stop loss and you could have easily make 1:3 return in this trade. Let me show you another example. And this is a resistance zone as you can see. And before continuing, let me give you one more pro advice. That instead of using a single line for the support or resistance, start using zones for the same purpose. This will give you more flexibility while looking at the chart. Now you see the price takes resistance at this zone and there are 2 touch points in this area. So whenever the price will take a resistance over here, in this area, it will act as a strong resistance for it. And same thing happens over here. The price takes a resistance at this zone and at the same time we can see that the RSI is taking resistance at its 60 level. So we got a confirmation on the chart and we got a confirmation using RSI. And let me show you one more thing, that we have a doji candle at the resistance zone, which itself indicates that the market is going to take a reversal. So after all this confirmation, we can take a short entry into the stock when the price crosses the low of this candle. And then we can simply keep on trailing our stop loss. And we could easily make 1:3 return in this trade. But now there is a question that when the price came to the resistance at this point, why didn't this trade work out really well? Although the RSI was again resisting at the 60 level, we would have made loss in this trade. And this is exactly what I want to tell you, that when you should trade on support and resistance and when you should avoid trading on them. You see, before the price takes a support at this level, we have a trend line which was broken by the price. So it is common sense that whenever the price breaks the trend line in a downtrend, it indicates a reversal and we know that the market is soon going to go bullish. So at this point, the number of bulls were too much in the market, so eventually the resistance couldn't push the market down. So this is where in such scenarios you have to avoid trading on support or resistance so that you don't end up making a loss. And even if you go wrong in this trade, make sure that you place a stop loss and do proper risk management so that you can minimize the loss to a very possible extent and your profits will keep growing. So lastly, thank you for watching this video till the end. If you like the video, please hit the like button. Share this video to as many traders as you know and subscribe to this channel for more such detailed information on the stock market, technical analysis and trading, and press the notification bell. I will see you in the next video.